Morning, guys. It's Tuesday, July 8th, 5:24 a.m. Central Time. Grain markets are lower this morning following an ugly day yesterday. December corn futures down 2.5 at 4.18 and a quarter. November soybeans down 2 cents at 10.18 and 3/4. December Chicago wheat down 1 at 5.69 and a quarter. December Kansas City wheat down 1 and a quarter at 5.50 and 3/4. December spring wheat down 4 and 3/4 at 6.52 and a quarter. It was another ugly day in the row crop markets yesterday. Why don't we start there?
So we saw both corn and soybean futures fall sharply on Monday. The December 25 corn contract declined roughly 16 cents, closing near 4.21 per bushel, while the November 25 soybean contract dropped nearly 29 cents to settle near 10.21 per bushel. The sell-off was driven by favorable weather forecasts coupled with recent conditions that have been nearly ideal for corn and soybean development in many areas of the Midwest. Futures also came under pressure after President Trump did not announce any new trade agreements during his speech in Iowa last week. Both markets had rallied beforehand on hopes that deals with India, China, or both would be unveiled.
Okay, we've got some stuff on the trade coming up next. We're also going to do crop conditions here in a second. Let's look at a December corn chart. We are within an earshot of contract lows this morning. It's very possible, at least, that we post some fresh contract lows this morning. So, yeah, you had a great 2-day rally late last week. We gave it all back yesterday, and now we're at risk of making fresh lows this morning. I think that the market is laser focused on the idea that the U.S. corn crop will be a record and perhaps a record by a wide margin. It just doesn't seem like anything else matters. We've got really strong demand. We're going to talk about export inspections later. Really strong there. Ethanol production's great. I mean, there's a lot of great things to say about demand. It just seems like the market is focused and only focused on U.S. crop prospects, which appear to be pretty good. Soybeans have acted better than corn on a relative basis, but as with corn, we had a big 2-day rally last week. We gave it all back yesterday. Should be some support, hopefully, in that 10-11 neighborhood under the November soybean contract. Looking at weather, I didn't do like a full run of the maps this morning, but just looking at the next 7 days, a lot of areas of the Corn Belt are going to see rainfall. Indiana, notably dry, and then some areas of the plains, like North Dakota, is maybe dry here over the next 7 days, but the trade just does not see a weather issue. Here's the last 14 days of precipitation. You can see Iowa saw almost twice its normal rainfall over the last 2 weeks. Same thing with Nebraska. Same thing with Minnesota was like 153%. And then some drier stuff in the central and eastern Corn Belt. Illinois, a little dry. Indiana, a little dry. There are definitely some pockets in those two states that have become dry. Parts of northern Illinois, northern Indiana. I know parts of central Illinois aren't in great shape. And there's been an argument, how are we going to achieve this record corn yield if Illinois doesn't do a record? And that's an Excel sheet and a math problem. But all in all, the trade seems to be convinced that the crop is in very good shape, and that's what they're trading.
President Trump is threatening to impose higher than initially announced tariff rates on key trading partners. On Monday, Trump sent letters to several nations informing them of their new tariff rate if a deal is not reached. He also extended the negotiation deadline from this Wednesday to August 1st. Japan and South Korea, two of the largest buyers of U.S. corn on the export market, received letters indicating a 25% tariff. Back in April, Trump's initial reciprocal tariff announcement set Japan's rate at 24% and South Korea's at 25%, so the updated rates represent only a slight change. Trump also threatened to impose an extra 10% tariff on countries aligning with BRICS policies. Among other nations, the BRICS group notably includes Brazil and China.
I guess this is negative from a sentiment standpoint. I don't think this is what's driving prices lower, though. Japan and South Korea are both big export partners. We import a lot of things from those two countries, and they buy a lot of corn from the United States. Japan is the second largest buyer of corn, U.S. corn, on the export market. They've accounted so far for 18.2% of all U.S. export sales this year. South Korea has been the fourth largest buyer of U.S. corn on the export market. They've accounted for 8.6% of all U.S. corn export sales. This is something to keep an eye on. Are these two countries going to tariff or eliminate U.S. corn purchases? I doubt it, but something to be aware of.
U.S. corn conditions improved for the second consecutive week. As of Sunday, 74% of the crop was rated good to excellent nationally, up from 73% the previous week and well above the 5-year average of 65%. The rating beat trade expectations of 73% and was the best for the week since 2018. Only 5% of the crop is rated poor to very poor. The U.S. soybean crop held steady at 66% good to excellent, matching expectations and topping the 5-year average of 62%, excluding last year. It was the best rating for the week since 2020, and only 7% of the soybean crop is rated poor to very poor.
Okay, let's go back to corn. So we've got a very strong crop rating at was it 74% good to excellent. Crop ratings in early July do not necessarily equal final yield. There is some correlation. Here's a statistic for you. Every year since 2010, in which early July corn ratings were 70% good to excellent or better, resulted in an above trend corn yield. So the trade right now, in my opinion, this is based on things that I've read and heard discussed. The trade is working with the idea that the U.S. national corn yield is going to be 2% to 4% above trend. And it could look something like this. If you're 2% above trend, that's like 184 and change. So if you're looking at U.S. corn production by year, total production, a 184 yield, and that may be on the low end of what's being traded, a 184 national yield on 87.4 million harvested acres is a 16.1 billion bushel crop, which is a record, and a record by a fairly wide margin. Your previous record of 15.3 billion bushels was harvested in 2023. So compared to that, a crop of this size with a 184 yield would be 800 million bushels larger, or about 5.2% larger. And that 16.1 relative to what the trade is trading, to what the funds are trading, that 16.1 billion bushels could be light. Maybe they're trading a 16.2 or even 16.3. It just depends on how you want to run the math. These are not my opinions. This is not my being traded, and this is why nothing else seems to matter. The demand doesn't seem to matter. The weak US dollar doesn't seem to matter. It seems like this is the only thing that matters right now, and maybe rightfully so. Let's go to wheat.
U.S. spring wheat ratings declined for a third straight week. As of Sunday, 50% of the crop was rated good to excellent nationally, down from 53% the previous week and below the 5-year average of 55%. The rating fell short of analysts' expectations of 53%. The U.S. winter wheat crop was 53% harvested nationwide through Sunday versus 37% the prior week and 54% on average. The trade was expecting harvest to be 49% complete. During the same week last year, 62% of the crop was harvested.
Wheat futures continue to act poorly. It feels like large speculators continue to lean on the complex. We ran the story yesterday about Russia and how they're cutting wheat export taxes, which is not a positive item. And with very weak row crop markets, the wheat markets may continue to have a tough time here.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Paul Neiffer joined me yesterday to do a simplified take on the Trump tax bill and what it means for farmers. This was like a 12-minute video, but we covered a lot of ground, and people have a short attention span when it comes to policy. So we wanted to cover the high-level policy items that will apply to you guys. And there's some really good stuff here. I mean, some of the increased coverage with regard to ARC and PLC and the crop insurance stuff and the higher payment limits. There's a whole bunch of things that are positive, I think, for you guys. But Paul gave some context to that. The video that we did on Thursday last week is extremely important if you're a corn producer. Do you know where your crop insurance safety net kicks in? And how do you calculate it? We made a free calculator available. We provided a lot of context and a lot of things to consider as it relates to your marketing with this. The corn market has lost a lot from its spring insurance guarantee, and this should absolutely matter with regard to your marketing. If you want to see the premium stuff, go to standardgrain.com. You can sign up today. It's a $50 per month subscription. You can cancel at any time. We just want to send you a ton of info. We don't really want to talk to you. We don't want to do your brokerage or sell you crop insurance or sell you anything else. We do have a text message line that goes straight to my desk that is available for questions and answers, and I respond to emails too. But it's an information service, guys. You should check it out today. Tons of great stuff, and we've got more great stuff coming out today. My friend Shay Folk is going to be on to talk about some risk management type stuff. Check that deal out.
The funds increased their net short position in the corn market last week. CFTC released weekly commitment of traders data on Monday. During the week ending Tuesday, July 1st, large money managers were net sellers of 14,000 corn contracts. The net short position of 190,000 contracts is the largest since late August. The funds were also net sellers of 21,000 soybean contracts and net buyers of 454 contracts of SRW wheat on the week.
Premium subs, the fund tracker charts are included in the email this morning. Check that out. So this short in the corn market it's fairly aggressive. The funds are saying, hey, we're bearish the market. This is not like an agnostic position like we talked about, a few weeks ago. The net long in the soybean market is curious, I think, given everything that we know. Brazil had a big crop. They're going to plant even more soybean acres here this fall. U.S. crop prospects appear to be in good shape, yet the funds are long. Funds continue to lean on the wheat market.
U.S. corn shipments increased last week. USDA reported that 59 million bushels of corn were inspected for export during the week ending July 3rd. The print was up 8% compared to the previous week and up 46% versus the same week last year. Soybean shipments were near the upper end of pre-report expectations at 14 million bushels. The print was up 64% compared to the prior week and up 32% versus the same week last year. Wheat shipments were also near the upper end of expectations at 16 million bushels. The print was down 8.4% from the previous week, but up 27% versus the same week last year.
So corn shipments are excellent, like 40% above the same week last year, and the market does not care at all. I think USDA almost certainly has to, again, revise upward its projection for current marketing your corn exports. But again, nobody cares because they think the crop is going to be big.
USDA reported a flash sale of corn on Monday. U.S. exporters sold 5 million bushels of corn to Mexico. Of the total, 1 million bushels is for delivery during the current marketing year, and the remaining 4 million bushels is for delivery during the next marketing year.
Mexico has been the largest buyer of U.S. corn on the export market the last couple of years. I would imagine that they will be again next year. What did cattle do yesterday?
Cattle futures were higher. Live cattle were 77 cents to $2.20 higher. Feeders saw gains ranging from $1.60 all the way up to $4.22. Box beef was mixed. Choice was up $1.23 at $3.90.98, and select was down 91 cents at $3.77.53.
Outside markets are quiet this morning. The Dow Jones is off 50. The S&P's up 4 points. Treasury's off just a little bit. U.S. dollar's about flat. Crude oil is down 27 cents in the August WTI at 67.66. Have a great day, guys. We'll be back on Wednesday.